What's going on, everyone? Welcome back to the Financial Freedom Show with Chase Lawson, where I, Chase Lawson, your delighted host, personal finance enthusiast, and author of the best-selling book, Financial Freedom, Breaking the Chains to Independence and Creating Massive Wealth, bring you a different personal finance topic each week, with the goal of making personal finance simple. Thank you so much for tuning in today. If you haven't yet done so, please be sure to subscribe so you don't miss any future content. And if you like what you hear, please let me know by liking this or leaving a review on whatever platform you're listening on. Now let's get started with another great topic, which on today's episode is that of the home office deduction. Due to the COVID-19 pandemic, more people than ever before are currently working from home, many of whom have likely been doing so for several months now. One of the questions I've been hearing from others is, do I qualify for a home office deduction on my taxes? And that is actually a pretty smart question. In case you are unaware, the IRS does allow certain individuals to write off expenses used for conducting business in their home. In this episode, I will discuss what the home office deduction is, who qualifies for it, and the rules and limitations of it. However, unfortunately for most people listening, you probably will not be able to claim this deduction for 2020, which I'll explain why in just a bit. So first of all, what even is the home office deduction? Well, the IRS has said that if you use part of your home for business, regardless of if you own or rent your home, you may be able to deduct expenses for the business use of your home. This includes all types of homes, specifically a house, apartment, condo, mobile home, or boat, and includes structures on the property, such as a detached garage, greenhouse, studio, or barn. The types of expenses that could be deducted for this purpose include mortgage interest, insurance, HOA fees, utilities, repairs, and depreciation. The whole home or structure does not have to be used exclusively for business. However, in which case, if you qualify for this deduction, you will be allowed a portion of these expenses based on the percentage of your home devoted to business. For those eligible to qualify for this deduction, the IRS has stated that the home office deductions are allowed if you use part of your residence during the tax year regularly and exclusively as a principal place of business or a place to meet with customers or clients. For separate structures such as a detached garage or barn, deductions are allowed if you simply use the space regularly and exclusively for any business purpose. So keywords there are regularly and exclusively. And for your own home, in order to qualify as your principal place of business, most of your income earning activities must occur there, or you use it to conduct administrative or management functions such as bookkeeping and processing invoices, and you don't conduct those functions at any other fixed location. So I know many of you are probably hearing this and thinking, well, I have an office in my home. It is now being used regularly and exclusively for doing my job since my office is closed, and it is where all of my income earning activities have been taking place. So why do I not qualify? The reason you probably do not qualify is based on changes to the tax code that went into effect starting in 2018 with the Tax Cuts and Jobs Act of 2017. Previously, you could itemize miscellaneous expenses on your tax return, including unreimbursed employee business expenses, including those associated with setting up and maintaining a home office. However, the Tax Cuts and Jobs Act suspended that deduction for tax years 2018 through 2025, barring any legislative action. I'm sure hearing that, you're probably thinking, well, what the heck? I'm getting screwed. However, most people probably aren't at the end of the day. After all, the Tax Cuts and Jobs Act nearly doubled the standard deduction, so a majority of Americans no longer itemize their deductions since they likely will not have enough expenses to itemize to exceed that of the standard deduction. As I mentioned in my episode on marginal taxes, the Urban Brookings Tax Policy Center estimates that about 90% of households will take the standard deduction rather than itemizing as a result of the changes put in place by the Tax Cuts and Jobs Act. However, even if you would itemize your deductions, your total miscellaneous expenses would have to exceed 2% of your adjusted gross income for the year, after which you could then write off the excess. So if your adjusted gross income for the year was $50,000, You previously could write off any miscellaneous expenses above $1,000 or 2% of the $50,000. The higher your income, the higher this threshold then becomes. So who does qualify for this? Well, in order to qualify, you must own your own business or be self-employed. Partners in a partnership may deduct home office expenses on their individual tax return, as long as the partnership agreement contains language addressing reimbursement of such expenses and their deductibility. Any individuals reporting income on a Schedule C, which is for sole proprietors, can qualify for this as well. However, all other employees and S-Corp shareholders are not able to take the deduction due to the changes mentioned previously with the tax reform. That being said, any expenses already reimbursed are not eligible. So if you are self-employed or own a business and the business reimburses you for these expenses, you cannot double dip and then write them off on your taxes. Further, you are limited in how much you can deduct. You're not allowed to deduct more than the gross income from your business activity, less any other expenses for which deductions are allowed in the absence of business use, such as home mortgage interest and real estate taxes, and less any business deductions that are not applicable to the use of the home, such as advertising and supplies. Now, with all of this being said, even if you do not qualify, there are still potentially a couple of options. One, Congress does have the power to grant additional COVID-related tax relief. While they haven't yet done so regarding home office expenses, they could do so in the future. Further, many employers who have been forced to have their employees work from home are offering reimbursement to employees or a stipend for things like home internet or office equipment. If you've been forced to work from home as a result of COVID, check with your HR department and see if they are willing to cover these expenses. In either case though, obviously these are tough times, so if you do still have a job, that is something to be thankful for. Just continue to stay safe and sane and do what you can to get through this tough time. Thank you so much everyone for tuning in to today's episode of the Financial Freedom Show with Chase Lawson. Hopefully it was informative and intriguing. As mentioned, while chances are you may not be able to deduct any home office expenses on your taxes this year, I will be sure to keep you updated if anything does change on this front. If you wouldn't mind, please go ahead and like this episode or leave a review once again. It means the world to me and helps with search algorithms so that this content gets to those who could benefit from this information. Let me know if you have any questions or comments or want me to cover any other topics in a future episode. And please be sure to subscribe so that you're among the first to get updated when any new episodes get released. Thanks so much, and until next time, stay safe and go get 'em.